Hello, everyone. This is another market moment with Randy Williams-Gurian. Hey, thanks for tuning in today. I just wanted to get some comments out about the kickoff of earnings season, which is going to start tomorrow with the money center banks. I think what's interesting to me is looking at all the issues that are in the economy because of the restart from COVID. And if those issues are not permanent, meaning they're there now, but 6 months from now, if they're not there, I think that's going to be a really good thing for equity prices. The problem is over the short term, we're going to hear some noise about some of these things, some of these we've got record high natural gas prices, we've got high oil prices, we've got high food prices. Those things tend to work themselves out over time. If they don't, and the higher prices stay with us, then that is going to be a problem, especially for the companies that have input costs that are going up. They're going to have to raise their prices, which ultimately should hurt down the road demand. So again, it's not a favorable set of conditions. It's just a question of whether these conditions will continue for the foreseeable future. And I'm a little bit more optimistic. Take a look at like natural gas. Yes, it's at a record high, but it's because there are issues in the supply chain and in the reserves and releasing that. It's not like there's no more natural gas, like we're out of natural gas. So I think that should come back online, and then the prices, supply and demand, the prices should come down. So I think, I do think, and the other thing is the earnings estimates for these companies have been adjusted by the analysts. So that's a good thing because they've been adjusted down. So it's a lower hurdle in which for these companies to beat their estimates. Now the question will be when they beat their estimates, or if they beat their estimates, how do the stocks react? Are we going to get a strong fourth quarter? Are we going to get a strong first and second quarter of 2022? That remains to be seen. It remains to see if we really restart the economy. And higher interest rates, which are already starting to show up, are also a deterrent for some stocks, especially growth stocks. So we need to be careful there. They also help the bank stocks, though. We've got bank stocks at really high levels. So if these interest rates continue higher, that would be good for banks, as long as they don't get so high that they slow down or curtail economic activity. And I think that Jerome Powell has his pulse on what to do with interest rates in either scenario. And he's being very patient, which is really good for stocks. So we'll have to see how this plays out, but I'm encouraged. I think we're going to have a reasonably good earnings season and hopefully good numbers and good reports from a majority of these companies, which will take us into the fourth quarter, and hopefully a strong finish to the year.